Sam Stovall, we're now 4 minutes away from the closing bell. Give us your sense of what an investor who wants to get in and buy something at least cheaper than it was, call it last Thursday. What looks good?
Okay, well, actually, they can look to history in terms of coming up with a wish list. Historically, the 10 worst performing sub-industries during that market decline tend to be outperformers when it's recovering from that sell-off. So areas like construction materials, Martin Marietta, like life and health insurance, such as Lincoln National, even looking at some of the semiconductor equipment like Lam Research. These are industries and companies that were beaten up the most that could represent a nice springboard for profitability.
I like that, springboard. David Kudla, give us what you're seeing right now at the landscape. What should investors watch for, whether it's data or a certain stock that breaches or falls through a floor or a ceiling, that you will be watching for your clients?
Yeah, this is the time to put your shopping list together.
Yeah.
Either those stocks, those sectors that you've been looking at, you can now buy cheaper than a couple of days ago or a week and a half ago. And along with what Sam said, when we look at those different sectors, we're concerned about those that are impacted by higher interest rates because interest rates have come up. The 10-year yield is 0.5% higher than it was a couple of months ago as of Friday. And we expect it to go higher. So we're concerned about home builders now. We're concerned about other interest rate sensitive areas. Certainly bonds, we want to be very careful about interest rate sensitive bonds. But there are going to be some good bargains here in stocks on the backside of this 10% correction that we've had. It may go a little further.
Okay.
It may be over as of this morning. But right now, put that shopping list together of what you have been looking at that you can now buy cheaper than you could a week and a half ago.
All right, well, you've got a minute and about 15 seconds to take that shopping list and make some trades. Hold on 1 second. I just want to show you guys that Peter Tuchman, who's the keeper of the hats here, had brushed this off earlier. 23,000. No, we don't need that, Peter. We don't need that today. We're at 24,915. And by the way, White House Press Secretary Sarah Sanders moments ago, when asked about the stock market and all of this fluctuation and volatility, said, quote, President Trump is completely focused on the long term, and nothing that has happened in the past 2 days has changed the fundamentals of the economy. But of course, she was pressed further because the president has been taking credit for the stock market rally for months now. Sanders said, quote, he doesn't regret taking credit for the country's improved economic performance. We remind everybody, the economy is not the stock market. The stock market tends to run well ahead of the economy and do beautifully over the past 8 years overall, incredibly well over the past 1 year. But you never know. The market is a voting machine, and there are a lot of voters in it. Right now, you hear the cheering start. We've got 15 seconds before the bell begins to ring, 25 before the whole day is over. We look at a gain of 525 points for the Dow right now, just off session highs. But what a day where stocks staged an incredible comeback in the final hour of trade. Second largest intraday point swing for the Dow in history, bested only by yesterday. That'll do it for the Clayman Countdown. I will see you right here tomorrow.